This is Alan Bush with ADMIS in the stock index futures. First of all, yesterday's declines linked to the growing instability. Political situation in Greece is causing some traders to think that the problems there could result in Greece exiting the currency union in the Eurozone. However, today we are seeing some recovery, even though we did see a dip to lower on the day when we did have the 9 o'clock economic reports coming in a little weaker than expected. So the Greek situation remains a negative. However, this is likely to be more than offset by additional economic stimulus from several of the world's central banks, including the European Central Bank. In fact, they are meeting tomorrow, and it is widely anticipated that the main topic of discussion will be the potential for a new quantitative easing program from the European Central Bank. So ultimately, the accommodation that we are currently experiencing from many of the world's central banks, plus additional accommodation, is likely to outweigh the negatives of the geopolitical problems that we are seeing. So the main trend on stock index futures still appears to be higher. Over to currencies, seeing the dollar index advancing with the dollar now still near a 9-year high. Pressure in the euro currency, this with weaker than expected economic numbers coming out this morning. Also some pressure in the pound, weaker economic numbers there. Also some debt in the UK, some government debt trading now at record lows. So we have to ask the question, how can the Bank of England raise rates, as many are anticipating later this year, as interest rates are at such historic lows? My feeling is that they will not be able to raise rates. Also, if the Bank of England can't raise rates anytime soon, how is the Fed going to be able to raise rates, with the consensus view now that the Fed will raise possibly at the October meeting? All of that is very supportive to the dollar index, bearish for the pound. The yen a little bit higher on a flight to quality bid in light of the situation in Greece. Once that gets resolved, I think we can see the yen resuming the downtrend. Also some gains in the Australian dollar with news that China is ramping up some infrastructure expenditures. So temporarily the Australian dollar higher, but longer term I think we can see lower prices for the Australian dollar as well. Interest rate markets, strong gains today, especially at the long end of the curve. We are seeing the 30-year bond now trading at 20-month highs. A lot of this is flight to quality, but a lot of the strength also appears to be due to anticipation of more economic stimulus from several of the world's major central banks, including the European Central Bank. So the main trend on treasuries is higher, especially at the long end, the 10, and then also at the for the 30-year bonds. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.